Folks, here recently I've been asked a lot about selling stocks. What are reasons to sell stocks? I don't know if it is because of the toppiness of the market, where a few stocks at the very top have just exploded to the upside and they've made the market very frothy at the top. I don't know if it's because a lot of other stocks are struggling. I don't know what it is, but I've been asked this a lot recently about selling, and we don't talk a lot about selling on the channel, just to be quite frank. We talk about buying, right? Acquiring more assets. But here today is a gem dropper video. I'm going to talk about the 3 big reasons to sell. If you are going to sell a stock and you do not fit at least one of these criteria, then you are selling for a false reason, essentially. It has to be at least one of these 3 if you're an investor in the market. Then after we get done going through that, I'm going to go through my Mag 6 in this video: Meta, Tesla, ELF, Amazon, PayPal, Palantir, and we'll speak about each of those 6 stocks. And do these 6 stocks, does anything in relation to these 6 stocks, do they meet some of these criteria? And guess what? Actually, some of these stocks do fit some of these criteria of these 3. And so we'll speak about that in this video here today, okay? Hope you really enjoy this one. Hope you learn a lot from it. I really do, because this is not a subject we speak about very often. And make sure you subscribe to the channel. Appreciate each and every one of you. All I ask is that you smash that like button. That's it, man. Smash a like for me. Alrighty, guys, so first reason up here why you would want to sell a stock is if the fundamentals have changed for the worse with the company. And let me be very crystal clear. A stock price going down is not the fundamentals of a company. Stock prices go up and down consistently. That's why the market opens each day. So if you have a stock price that's going down, it doesn't necessarily mean the fundamentals are going down. It could mean the fundamentals are going down. We'll get into the fundamentals. But when I'm thinking about fundamentals of the company, I'm thinking about financial statements. I'm thinking about income statements. I'm thinking about balance sheets, right? I'm thinking about those statements showing that this business is falling apart, right? I'm thinking about revenues down. I'm thinking about gross profit down. I'm thinking about earnings per share down. Those sorts of things, and especially if it's a multi-year trend where it's just getting worse and worse and worse, that means there's clearly deterioration in the actual fundamentals. I have a perfect example of a stock I'm going to show you right now where the fundamentals of this company are getting worse and worse and worse consistently year after year after year. Look at this company here. You know what it is? RH, Restoration Hardware. This is I would call them a luxury furniture retailer, and their fundamentals are getting consistently worse year after year. You look at them a few years ago, $3.7 billion of revenue. Then it goes down to $3.5 billion, then $3 billion, right? And then on a trailing 12-month basis, revenues have gone down even more. So you have a consistent multi-year trend of the revenues getting worse and worse and worse. Meanwhile, what you're also seeing is gross profit get worse, right? Gross profit went down here, it went down massively here, and then on a trailing 12-month basis, it's also down as well. So we're talking about a deterioration of about $500 million in gross profit in a matter of just a few years there, right? Clearly, the fundamentals of the company are getting worse. If we look at the net income of this company, went from $688 million down to $528 million, down to $127 million. And on a trailing 12-month basis, they're down to $82 million in net income. And there's a very decent probability that they're actually going to start losing money over the next 12 months. And that's pretty shocking, to be quite frank, right? That's clearly the fundamentals getting worse for a company. If you look at their balance sheet, also same exact situation. They went from $2.1 billion in cash and short-term investments down to $1.5 billion, down to $123 million, down to $101 million. That is the fundamentals of a company getting worse, okay? The second reason to sell a stock is if you believe the fundamentals are going to change for the worse for a company, okay? So maybe it hasn't happened yet, but you believe it's going to happen, and you're putting the pieces together and you're like, oh man, this company I hold, they're about to be in some trouble over the next several years, right? And so we'll stay with the RH example. So let's imagine, it's a few years ago, right? And you're thinking about RH, let's say it was a holding of yours that you had held for the last 5 years, right? And so let's say here we are, the end of 2021, the beginning of 2022, and by that point, we already know inflation's completely out of control, right? And we already are very aware the Fed's going to have to go through a rate hike cycle. So you're thinking about RH, and you're like, man, things have been really good with this business over the last few years. A lot of people have been buying a lot of homes. Interest rates have been on a floor. We've had a lot of people spending a lot of money on furniture. And the company's executed well, and they've made a lot of money for themselves, but I think it's going to be a hard next few years, right? So let's imagine you come to that conclusion, and you're like, it's not showing up in the numbers yet, but I think over the next few years it's going to show up, and the company's fundamentals are going to get far worse. Well, if you came to that conclusion in January 2022, which, by the way, in January 2022, it was already clear the Fed was going to start hiking rates and that we were going to go through a major hike cycle. It was also crystal clear that inflation was out of control. There was no debating that by the time we got to January 2022. So here you are in a situation where you could have cashed out of RH stock at $402, right? Now, keep in mind, the stock had already crashed. It had been a $700 stock. So to go from 700 to 400 is a crash. That's where it becomes very important to swallow your pride. Because the stock had already crashed, but if you really came to the conclusion of, I'm just late on this, people just realized that this company's in some trouble before I realized it, right? You could have saved yourself several years of a bad investment, right? I mean, today, the stock's $217, and here we are several years later. It's 2.5 years later? 2.5 years later, and the stock's down around 50% from that point, right? So you would have been far better off cashing out of RH, heck, putting that money in a savings account, anything, even keeping it in cash would have been better, which is hard to believe, right? Literally, than keeping in RH stock. The third reason to sell a stock is if the valuation is too sky high. If a company has priced in too many years of growth, it can make sense to cash a position. So for instance, if we go to Tesla, right? Tesla now is at a PE ratio somewhere in the 50s, 40, somewhere in there roughly, right? On a trailing 12-month basis. Now, if I was to take you back to a few years ago, if you go back to late 2020 and into 2021, Tesla's PE ratio was off the charts. It was 1,127, 668, 354, 250, 215. Now keep in mind, they were eating up that PE and it was getting better and better and better, but still, even a 215 PE ratio, we're talking about that's 10x roughly where the market trades at. The market's usually going to trade at a 20-ish PE, sometimes going to get down to like a 15. In an elevated market, it might get up to a 25, but let's call it 20-ish. So Tesla's trading like 10x a PE ratio, even at a 215. Now, if we want to say 1,100, it's a whole different stratosphere, right? If we want to say 668. So Tesla, at that particular time, just to be quite frank, it priced in too many years of growth. And obviously, we've seen that, right? Because back in those days, Tesla was a $200 to $400 stock. And here we are well over 3+ years later, and the stock is under $200, right? And so I certainly cashed a ton of Tesla shares back during that time, and it made sense, and I didn't really want to do it, but it made financial sense because I looked at Tesla, I'm like, this stock is probably going to be dead money for many years, right? And so I view the stock as very different now, and we'll talk about that in just a moment, but at that time, it made sense. The company had priced in too many years of growth, and it set itself up for years and years of stagnation. That happens with stocks, okay? Now, let's go ahead. I want to go through all 6 of these companies. I want to go through Meta, Tesla, Elf on a Shelf, Amazon, PayPal, and Palantir. And now let's go ahead and take these through the real world, and let's put them all through the ringer, as they say. And we'll talk about, now first off, this number 2, for all of these companies, it's going to be a no, right? So we don't even need to discuss that, because if I felt this was, the fundamentals of these companies are going to get worse, I would not hold them right now. So we can just knock out number 2 right off the bat. So what we're going to focus on for all 6 of these is, have the fundamentals changed for the worse? And is the valuation too sky high? Have these companies priced in too many years of growth? Okay. So Meta right off the bat here. Well, Meta was interesting because for Meta, the fundamentals were actually getting worse there for a little bit. If you look here, the year 2021, $117 billion of revenue, and then they went down to 116 in 2022. So that's actually fundamentals getting worse. If you look at their gross profit, it went from $95 billion down to $92.8 billion. So the fundamentals were getting worse, right? But then last year, they came back with massive growth. They did almost $135 billion of revenue last year. And on a trailing 12-month basis, they've now done $142 billion of revenue. Gross profit went from $92 billion to $108 billion of gross profit. And then now on a trailing 12-month basis, gross profit is at $116 billion for Meta. If we look at Meta's net income, it was looking bad there for a bit, right? It went from $39 billion down to $23 billion, but then they increased it last year to $39 billion from $23 billion, and now on a trailing 12-month basis, they've done $45.7 billion of net income. Earnings per share was in a bad trend. It went from $13.99 to $8.63, but then it came back last year to $15.19, and then on a trailing 12-month basis, on a basic basis, $17.85 earnings per share. Phenomenal. So the fundamentals were getting worse, but now it's clear the fundamentals are getting better and stronger and better and stronger, right? Valuation. Is valuation a concern for Meta? So we'll go to 1000xstocks.com, and what we're going to find, trailing 12-month PE, let's call it 27-ish, forward PE 24-ish, 2-year forward PE 20. No. I mean, when you think about the earnings per share growth Meta has, the revenue growth the company has, I mean, those valuation metrics, if anything, you can make a very strong argument that Meta is significantly undervalued. And you can make a very strong argument that Meta should be priced more in the $700 to $750 range right now, rather than $500. So, because, I mean, you could easily slap, on a forward P basis, you could easily slap a 30 on this stock. And that's not even a stretch, given the earnings per share growth of double digits and the revenue growth of double digits. I mean, a 30 is not crazy at all for a company like Meta, right? So when it comes to Meta, we don't have anything. We don't have anything there. We don't have the fundamentals getting worse. They're just getting stronger now. And we don't have a valuation problem, right? So that leads us to the next one, which is Tesla, my Esla, right? So Tesla. 100% the fundamentals are getting worse for this company. That does not mean they're going to continue to get worse, but there's no debating the fundamentals have gotten worse, right? They were on a nice trend, $53 billion of revenue, then up to $81 billion, then $96 billion, but on a trailing 12-month basis, they now dropped down to $94 billion. So revenue has literally gone down on a trailing 12-month basis versus what they did in 23. Not good to see. Gross profit went from $13.6 billion way up to $20.8 billion. Things were phenomenal. And then they fell to $17.6 billion and then $17.8 billion. So, if we just look at what 2022 numbers were versus a trailing 12-month, they dropped about $4 billion in gross profit there. So 100% the fundamentals of Tesla when it comes to financial statement front have deteriorated, right? And you can see that with operating income. You can see that with net income as well. And if you look at margins over the last couple of years, yes, things have clearly deteriorated. Now, you could also make a case that Tesla's overvalued. Now, certainly I don't feel it's overvalued given how much long-term growth this company has. But there's no doubt at a forward P of 70, you could make, a lot of people look at Tesla as an automaker, right? I look at it as much more of a automaker plus energy company plus tech company plus infrastructure, electricity company, right? And storage and power and those sorts of things, and robotics and AI. I mean, it's a lot of different things. But the bottom line is a 70 forward P for, if you wanted to just chalk it up as a car company, is very, very high. So you could make a case on valuation. So if I was looking to get out of Tesla, my excuses would be essentially fundamentals have deteriorated over the last, we can call it year and a half to 2 years. And the valuation is very elevated on a P basis, right? That leads us to ELF. What can we find with ELF? Well, we're certainly not going to find anything in regards to the fundamentals of the company getting worse. This is disgusting. That's the best way I could describe how great ELF is as a company. Look at the revenues. 267 million, 282 million, 318, 392, 578, over $1 billion. I mean, it doesn't get better than that. If you want to see the most beautiful income statement you've ever seen in your life, just look at that right there. Look at your screen and tell me that's not the most beautiful income statement in the history of mankind. Look at gross profit. Gross profit went from 163 to 181, 206, 251, 390, 724. Oh, beautiful, beautiful. The best of the best. And then we look at valuation. We got an excuse to sell. Forward P is 72. Now keep in mind, ELF is probably going to beat all analyst estimates, so that forward P is probably in reality going to be a lot lower than what it says right now. But the bottom line is, and even if we look at a 2-year forward P, we can say 50. So if I was looking for an excuse, there's my excuse to sell ELF. I could say, hey, that valuation's very, very stretched on this stock. So ELF, we got valuation there, right? Now keep in mind, the growth rates of ELF, they should eat up these PEs over the coming years, and it shouldn't be a concern. But once again, if I want to make an excuse, my excuse is right there. It's valuation. Amazing's on. Amazon, we all know this company. I mean, one of the most famous companies in the world, right? Beast. Look at the revenues. They went from 280 billion to 386, 469, 513, 574, and on a trailing 12-month basis, $590 billion of revenue. Gross profit went from 114 to 152 billion to 197, 225, 270, and on a trailing 12-month basis, $281 billion of gross profit for this company. An absolute animal. Absolute animal Amazon is, right? Now, so basically on the fundamental side, we have nothing we could go off of for Amazon. Nothing. Absolutely nothing. I mean, just extraordinary. Extraordinary to see those sorts of numbers from a company. Incredible, right? But if we want to push something, if we want to push some sort of negative narrative to make us sell Amazon stock, we have it. It's valuation, right? Forward P, trading at 42. Keep in mind, Amazon's a very famous company for coming in and beating their numbers. So decent probability they're going to come in and beat that. But forward P of 42 is significantly above the market. We can call that a double of where the market trades at, if not a little over double. 2-year forward P 30, significantly above where the market trades at as well. So the bottom line is, Amazon, if I'm looking for an excuse, my excuse is valuation, right? Keep in mind, this is not a high valuation. Amazon should be trading $3 trillion plus right now. Given the earnings per share growth over the coming years, right? Current year expected earnings per share growth 53%, and then next year, keep in mind, don't be surprised if they beat that, but 24% next year as well, right? And then we can talk about double-digit revenue growth. Amazon should be pushing $3 trillion right now, right? But the moral of the story is, if we wanted to push something, we'll say valuation. That would be our excuse to get out of Amazon because we really don't have anything else. PayPal. What do we have for PayPal? Well, PayPal is very interesting. Very interesting is PayPal. Because when you look at the revenues, there's no clear problem in the business model, right? With the fundamentals of the company. They went from 15.4 billion to 17.7, 21.4, 25.3, 27.5, 29.7, and then on a trailing 12-month basis, over $30 billion of revenue. So that there does not show us any glimpse of the business model in trouble or anything problem with the fundamentals. But we have an issue actually in gross profit. So check out gross profit. It went from 7.1 to 7.9 to 10 to just under 12, and then it went down to 11.6. Then it improved again to 11.7 billion, and then it improved again to 11.9 billion. But here's the problem right here specifically. Between 2022 and 2023, the revenues increased around $2.2 billion. But you only witnessed the gross profit increase by about $100 million. That's not good. What that means is, in order for PayPal to essentially see their bottom line go up in any substantial way, they've got to cut cost out of the business model, because there's something going on there in regards to their cost of revenues rising so substantially, right? And so this is some food for thought in regards to PayPal. So we have something to go off of if we're looking to go off of from the angle of like fundamentals getting worse. It's not a strong case, but there is some sort of case that could be made here, okay? In regards to valuation, do we have anything on valuation for PayPal? The answer is absolutely not. The company trades significantly under where the market trades at on a forward P basis, a 2-year forward P basis. We've got nothing. You could just make an argument that PayPal is very undervalued if you're talking about valuation. But the PayPal, we got something on the fundamentals. Once again, not a strong case, but we have something there. If we're looking to, like, give me a reason to sell PayPal, there we go. Fundamentals around gross profit, right? Next one up here, Palantir. It's brought us anything but Palantir, but tiers, right? The stock's been incredibly strong. So in regards to Palantir, right? If we look at this company, revenue-wise, went from $742 million to just under $1.1 billion, $1.5 billion, $1.9 billion, $2.2 billion on a trailing 12-month basis, $2.3 billion, right? Incredible. Gross profit, $500 million to $740 million, $1.2 billion, $1.5 billion, $1.8 billion, $1.9 billion on a trailing 12-month basis. Incredible. Now, also, I do think it's important, I just mentioned in regards to Palantir, is the fundamentals have changed massively for Palantir, but for the better. That's the good scenario. We're speaking, obviously, about fundamentals that get worse for a company and being a reason to sell. But if you're looking for reasons to buy, also think about it inverse. Think about it in terms of, do I have something to go off of to essentially make me buy shares, even if that stock's significantly above where I started buying it? In order for that to happen, usually the fundamentals had to get a lot better than you were expecting. And with Palantir, that's certainly the case. The growth rates have accelerated for this company over the past several quarters. We see clearly there's a major pickup in customer demand, customer interest. And so if you want to play this game on opposite and you're saying, give me reasons to buy stocks, when the fundamentals change for the better in a substantial way, just a little food for thought there. And I think that's something that might be, help you guys out in kind of thinking about the market a little bit differently, right? Now, in regards to valuation for Palantir, no doubt we can make a case. Forward P 77, even if they come in and beat that, which is very plausible, it's still insanely high compared to the market. Now, keep in mind, Palantir's got growth and growth on growth for a long time, but we can make the case about valuation for Palantir, right? So if we went through that, my opinion overall is we got weak cases all around. Weak cases, but we have cases nonetheless. The strongest case could probably be made to sell Tesla, but at the end of the day, no, thank you. Okay. So hope you guys get a lot of value out of this little gem dropper here today. I appreciate you guys joining me for this one. And if you want access to 1000xstocks.com, you want to apply for that, I'll put that as the first pinned comment down there here today. And once you join us in 1000x, you're going to get your Steel membership card in the mail. That's a founding member card. A lot of people are really excited about that. And then if you enjoyed a video like this and you want to learn from me on a much deeper level, get access to all my course curriculums, videos teaching you everything I got up here that I've learned in the past 15 plus years, then click the second pinned comment down there, fill out an application, and join my private group, which is access to all my best course curriculums, plus access to exclusive videos and our 6 and 7 figure Discord chat. All right, guys, much love and have a great day.